Did the stock market crash get canceled? Well, at 8:30 this morning, stocks took a notable flip and they actually closed near the high of the day. Not only that, but SPY stock actually put in a bullish engulfing candle. So you might be wondering what caused that massive flip? Well, at 8:30 this morning, we got initial jobless claims and PPI. And notably PPI because it came in red at zero point 0.2, which helped to offset some of the flop that we got from yesterday with CPI coming in quite hot. But this only explains part of the move or the first one. So what caused the second part of the day or for us to actually close near that high of the day? This is where we have to look at two more charts. We have to look at Apple, which just did it today. Nike swoosh, just do it. So what caused Apple to go higher? We'll talk about that in 1 minute here. Not only that, we also had NVDA up, right? Boop, all the way higher. Bullish engulfing open, and it just did not look back. So what exactly happened? Well, it's pretty simple too. Apple plans to overhaul entire Mac line with AI-focused M4 chips. Revamp will bring AI capabilities and memory improvements. This will be important because it's going to continue throughout 2025. So what does that mean? Rally on, baby. Lay on the risk. Let's buy the dip. We were at 52 this morning, and now that's it. 1 day, we're right back into greed. So stocks did quite well today, but I would not say it's fully over yet. We got a little bit of a concern because Morgan Stanley drops on report of probe into the wealth unit. Oh no. And that's important because banks are going to be reporting tomorrow. So it sounds like I'm saying we're bullish and we're bearish at the same time. And that's exactly what I'm saying. So let me take a step back and explain myself. Yesterday, I said that maybe the stock market crash is over because we've already gone down to that 1%. And if we do not break that weekly candle on QQQ or get bearish follow through, I'm not sure this time's going to be the same. Maybe it's different. So let me go through and tell you the story, but please make sure you stay tuned all the way until the end because I do want to leave you with some really good nuggets of good information. Let me just go back here to make sure I got all my charts. And the quick reminder from yesterday was that we were talking about bullish engulfing candles. We've had 3 of them right here, and right here. And the reason why this is notable is because we dead cat bounced, dead cat bounced, dead cat bounced. And right now we have a head and shoulders, and head and shoulders are not bullish. However, we did not get that follow through confirmation by looking here at QQQ on our weekly chart. This one did not put in the weekly lower low, which is exactly what I was looking for. Ironically, it was SPY that broke down this week, which means that the S&P 500 is actually looking a little bit softer. Right now, we have a failed breakdown. So we have to make sure we're receptive to the close of the week, which means 4 o'clock tomorrow. And that's exactly what we talked about. If we close below last week's low, we're also below the 50 DMA. So I don't want to repeat myself too much, but I talked about how we had all these warnings, but unless we get confirmation, all they are warnings. So as we know, the market can move violently with any one headline, and that's exactly what happened. So we're back into greed, stocks are rallying, and we got big tech kicking off earnings with Netflix next Thursday. So if banks are going to shake this off, we're going to find out tomorrow when they report earnings. Notably, JP Morgan, Wells Fargo, BlackRock, Morgan Stanley, and Goldman Sachs are going to report early next week. What I also want to do is ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. Thank you ahead of time. So when we look here to the heat map, we have to be mindful that not everything is rallying together. We look out to the 1 week, it's like, oh my God, right? Still pretty red out there. Yes. So a couple of blocks are red, notably Apple and Tesla, which I've talked about how they've been unable or unwilling to shake off bad news. And here's where I get a little bit more skeptical. So I'm showing you an alert today from our system, thealgo.com, which is for a trade alert or a window of opportunity for up to 3 weeks. However, we failed to hold the alert price at 51873, and the risk reward here is not great. So this could just be a dead cat bounce where we dead cat bounce and then we ultimately go lower. I hope we don't, right? I keep talking about bearish stories, but I'm long. I lose money if the lines go down, but I cannot ignore all the warnings we've gone through. So it's not down and out quite yet, but the warnings are starting to stack up. So as we go through the key dates for this week, we now got through our third most important data point, and that's what I mentioned. We have to wait until Friday to know where that weekly candle is going to close out, to know whether or not we're going to get that QQQ bearish engulfing candle. As of right now, it's a no, but hey, everything can change in 1 day. So when we think about this alert going through today, it means there's a whisper alert. We should get a follow through alert tomorrow if we get continuation. So all this means is that the risk reward is now not really skewed to the upside. And we're hearing a lot of bears come to rumble, right? Larry Summers says CPI raises chance Fed's move could be a hike. He did still say that base case is for a cut, but he's sounding a little bit more hawkish than before. What's also really important to keep in mind here is that take a breath and remember that your averages see more than 3% dips during the year, more than 5% dips during the year, right? A mild correction or a dip, and then a 10% correction once per year. A bear market every 3.5 years. So far, all we've done from peak to trough is 2%. So that's why I was joking yesterday about whether or not we just survived the stock market crash of 2024. And there was also some very interesting headlines about inflation news may delay a cut, but there will be a cut before the end of the year. Here's another really interesting headline from Biden. Biden says they might delay them by a month. 1 month. That's it. Whoa. So what's he talking about? Let's go here to that CME Fed Watch tool. We look at June. There's a 77% chance the Fed does nothing in June now. But if we take Biden at his word of 1 month later, well, the market doesn't believe him. There's still a 52% chance or base case of nothing happening at the end of July, which would be 1 month later. So this market is flipping and it's flopping and it's going everywhere. But as we've talked about before, if you've heard the warning and you've made a plan, there's no need to worry. Dips are normal. Take a breath, relax, and enjoy the ride. So we've talked about exactly where we could go. We've gone through all of our key data. Now it's just up to banks for tomorrow. If we can hold the line tomorrow, that is going to be very bullish for stocks. So let me leave you with a couple of quick charts here because I think that's what really matters. We've talked about how we got close to our 50 DMA for the S&P, but we did not test it. This looks eerily similar to Bitcoin, which I've called our leading indicator, close to touching it 1, 2, 3 times, but did not actually hit it. If we now looked at QQQ, though, this is where the story gets a little bit more interesting or spicy because we didn't hit it for a while, but now we've hit it a couple of times here, right? Hit it 1, 2, 3 times now. Okay, well, this looks quite similar to Ether, where we hit it 1, 2 times and we fell below. So all this means is that right now, the NASDAQ is a little bit softer because it's actually tested that short-term price, even though it's leading on the week. So what this really tells me is that people are bullish going into tech earnings next week. And with Apple moving up by 4%, that really gave a big lift to stocks. So right now, the NASDAQ's up by 1.1% on the week. And we did not get the bearish confirmation I talked about. I'm not sure we're going to get it, but the S&P is actually now the one that's softening up a bit. So does this mean that we're going to have a little bit of a clue from bank earnings tomorrow? I'm not sure. So what I would encourage you to do is to tune in live with me tomorrow at 9:15 a.m., where I'm going to take you through the market open and Q&A starts at 9:30. If not, I laid out all my notes here on the weekend on this card. You can see that link in the description. And if not, you can click on the link on the left-hand side now to watch the weekend deep dive, or subscribe on the right if you want to hang out with me tomorrow at 9:15. Thank you so much for watching.